Despite economic hardship, L&T has delivered an impressive set of results for the quarter gone by. Strong growth in execution, robust order inflow and improvement in operating margins despite cost pressure marks a great start to FY23. Results were ahead of expectations and strong performance on these fronts sets the ground for higher earnings visibility. Earnings upgrade cycle could now start to play in the coming months, lending strong support to the stock price as well. L&T sustained strong momentum, delivering 22% growth in consolidated revenue during a seasonally soft quarter of June, led by infrastructure and IT businesses. Infra segment, which makes for 40% of the revenue, reported a robust 37% growth, driven by strong project execution. IT and technology services business grew strongly 31% YOY, driven by pickup in the end-user segments which is BFS, travel, transportation and even hospitality industries. Improved ridership in metros as well as higher plant load factor in Nabha plant boosted development projects business. Growth in high-tech business was in mid-single digits as healthy growth in heavy engineering was offset by tapering off in execution of some defence projects. Energy projects witnessed subdued growth owing to client delays and supply chain issues. Financial services segment reported marginal drop in revenue. L&T saw a slight improvement in its margins performance. IT and technology business saw a mild expansion in margins as improvement in the operating efficiency was more than offset by increased wage costs. L&T maintained margins in the core infra and energy segments as slight drop in infra business margins owing to higher input cost and adverse mix was offset by improvement in the energy business margins owing to execution savings in few projects. Reduced losses in the development business owing to improved ridership in metros as well as growth in the financial business margins also contributed to the slight margin improvement that we saw in the June 22 quarter. Amid global macroeconomic volatility, Indian economy is relatively more stable. The economy has continued to sustain the strong recovery as indicated by robust monthly high-frequency indicators. Government moves to cut taxes on petrol and diesel, imposition of export duty on steel and petrol, restrictions on food exports as well as increasing interest rates would ease the overall inflationary pressures. Government efforts to jumpstart economic growth through higher infra spends and incentivizing domestic manufacturing is likely to benefit L&T. Also, higher oil prices are likely to result in increased hydrocarbon and infrastructure capex by the Middle East, which is a key market for L&T's projects business, which also definitely augurs well for the company. Under the Lakshya 2026 strategic plan announced recently by the company, L&T aims to continue a planned trajectory of profitable growth via an efficient and timely order book execution, continued focus on enhancing shareholder value, driven by retaining its leadership position as well as improving shareholder returns on a sustainable basis. Under Lakshya, L&T would also diversify into new businesses of green energy, e-commerce platforms, as well as pursuing exit options or limiting its exposure to non-core businesses. From peak levels seen in January this year at around 2100, L&T stock has corrected along with the overall market correction to a low of 1455 rupees per share in the last week of June. While it has seen a swift recovery, even at the current levels at around 1715 apiece, the stock offers good value in the light of intrinsic value of its different businesses as well as improving earnings visibility on the back of strong growth in orders and stability in margins. On a price-to-earnings basis, the stock is trading 18 times its FY24 estimated earnings. Moreover, our SOTP valuation at 2065 rupees per share offers a good 18% upside.